Lightning is private by design. So we were like, well, if we want this network to continue to grow and develop, it just helps to have a lot of information out there for people that they can use as benchmarks that sort of give them an idea of where things are at today. People like to understand things like, does it make sense to have a lot of channels? Like, and things like, what are the biggest bottlenecks in running Lightning infrastructure? There's different reasons why people are on the Lightning Network, and it's good to be aware of those. So in a way, it's sort of a self-balancing mechanism, I think, where as long as if there's money to be made, then obviously more people will naturally flock towards it and want to start spinning up their own nodes and do it. So there's really strong incentives there for that aspect. What could be the worst case, and this is something I've always appreciated about Bitcoin, is that the engineers always think from this perspective. Not like, how can we optimize and make things as good as possible? It's how can people break this stuff and make it really awful for everyone? Like now suddenly people have the tools to build this kind of stuff that wasn't possible before Lightning. And that's something that's really exciting, I think, to just see like, how does that play out and is there adoption there?
Sam Wouters is a Bitcoin Research Analyst at River, who has recently put together an in-depth report on River's Lightning nodes. In our conversation, Sam explained his findings after studying payment flows on River's Lightning nodes. We discussed River's API service, and we discussed the future of payments and routing on the Lightning Network. Sam has asked to have his share of today's show splits sent to the Human Rights Foundation. So if you enjoy this episode, the best way you can show your support is by sending in sats over the Lightning Network. Half go to myself, half go to the Human Rights Foundation. You can use any Podcasting 2.0 app, but my favorite to use is Fountain. Quick shout out before we get into the episode. Today's show is sponsored by Voltage. Voltage is the industry standard and next generation provider of Lightning Network infrastructure. Today's show is also sponsored by Stackwork. And Stackwork is a Lightning powered transcription tool that takes the best of AIs and humans to create better, faster, and less expensive transcripts. We'll have more from Voltage and Stackwork later in the show. Sam, welcome to the show, and thank you for taking the time to chat about the River Lightning report that you released recently. Let's start with a bit of your background before we get into the details of the report. Can you tell listeners more about how you got into Bitcoin and why you decided to work at River and focus on Lightning?
Cool. Thanks for having me, Kevin. So I got into Bitcoin rather early on, I'd say like 2014-ish, 2013. Initially learned about it through a video game I was playing, where people were exchanging the goods in the game economy for real life money. And the challenge there was, if you're exchanging virtual goods, how do you prevent chargebacks? Because you can't really prove that you have received the goods. So after a while, people started using cryptocurrency, Bitcoin specifically at the time. And that got my interest for the first time, sort of. And at the same time, I was also trading in that game. I was using that economy to make money. But there were these essentially largely Venezuelan gold farmers. So they would just set up these mass bot farms of accounts that were gathering resources in that game and then selling that for real life money. So for them, earning like $10 a day is life-changing money. So they were doing this, and then some of them would have probably used Bitcoin as well. But in general, that taught me about hyperinflation and about money and a lot of these things that I just previously had no concept of, as I was just pretty young. And so from those two angles, from the sort of the need to exchange money in the game for real life goods and to see what money can do if it's not properly sort of set up, let's call it that, like if countries are messing up and printing a lot of money, as the economy in that game was just absolutely tanking as a result of all of these people flocking in with their botting. So that got me really interested in Bitcoin. Together with a friend of mine, we started learning about it, and it took me quite long to actually understand what it was all about, as back then there was very little non-technical information, and I'm not a technical person. I've tried to develop a bit here and there to learn some coding. I can do some basic things, but nothing too fancy. So it took me quite long to get it. And when I finally understood, I realized, well, if it's going to take everyone this long to understand it, like maybe I'm an exception, I'm just not smart enough, but probably this is going to be too complex for a lot of people. So if it takes that long, it's never going to take off. So I thought, well, I can pursue that path of becoming a better developer and making it more accessible to people, or I can try to explain to people what I've learned and just write things, give presentations, etc. And that's what I started doing. Started writing a lot about Bitcoin, just got spent a lot of time learning. Let's start there, because I just had a lot to learn at the time besides just the basics. But started giving a lot of presentations. I've probably done like 100 plus over the years for all kinds of audiences. I'm no Andreas Antonopoulos, who's all over YouTube and has traveled the entire world, but I tried to do what I could sort of at a local level with some international presentations. Learned a lot from doing that, and then ultimately ended up at River when I saw a tweet from the CEO who was like, hey, we're looking for a Bitcoin research analyst. And I live in Europe, and in Europe there aren't a lot of Bitcoin focused companies. There are some, but the scale is a bit smaller than in the US. So it was difficult for me to find a job like super specifically focused on Bitcoin and basically doing exactly what I'm doing now, the research side of things and the content side of things. So when I saw that tweet, I was like, I owe it to myself to reach out and give it a shot. And now I think I've been there for 5 months or so. It's been really awesome. And recently put out the report that we'll be talking about a bit today.
Awesome. I want to touch on this game first of all that you mentioned at the beginning. What was the game called?
The game is called RuneScape. It still exists, I believe. People always knew like World of Warcraft, and then RuneScape was sort of like the second biggest, I think. Just started playing that with friends, and then from there, like everyone kind of quit, and I only kept playing it for the trading aspect of it, as that was quite interesting.
Very cool. And then to touch on your second point about, being introduced to Bitcoin, not being a developer, and then trying to find a way to contribute to the ecosystem by explaining these concepts. I'd love to hear your high level assessment on, whether or not there's often this debate in technical in areas of like technical discussion with, especially in Bitcoin, people wondering, do we need more builders? Do we need more developers? Do we need more marketers? Do we need more designers? What do we need more of? And I think oftentimes the developers get prioritized because you have to build code to build these internet apps that people are going to use to interact with Bitcoin. But I want to hear your thoughts on whether or not Bitcoin has enough marketers, enough explainers, educators, enough people doing all the other roles that are involved in creating a global movement outside of programming.
Yeah, it's a great question. Like one you can definitely talk quite a bit about, so I'll try to keep it somewhat brief. I think you need all of it, obviously. The question is like, to what degree do you need each? I think there are quite a lot of people who are really passionate about Bitcoin and who try to market it, let's call it that, to try to spread the word, to evangelize it. My reservations around a lot of what happens is that a lot of people get so passionate about Bitcoin that they sort of overwhelm people who are somewhat open or receptive to learn about it, but they don't always bring it in the best possible way. They immediately start, like they tell them, like, go read a book, like you go read the Bitcoin Standard or something if you're even slightly interested. But how many times do you ask someone, like just very briefly, like, hey, what is this topic? And the first thing they tell you is, yeah, just go read this, I don't know, like 400-page book or something. Like nobody does that. That's not a good conversion rate. It doesn't work. It turns people off from actually doing that. And in some ways it's lazy it's a lazy way for the educator to just kind of ship it off and be like, this thing really worked for me, so it should work for you, and just go learn this way. So I don't know if we necessarily need more people to market it. I would just like to see more people be a bit more down to earth about the education and challenge themselves a bit to explain this properly to people. So it's more about a quality over quantity kind of discussion, I think.
What have
because
you learned?
there's a lot of good content out there, but
Yeah.
not everything resonates with everyone, I suppose.
In your time studying and explaining Bitcoin concepts, what have you learned about how to become a better educator?
So one of the things I've always done, like everyone has their own approach to it, but instead of learning this 2-minute pitch or something where you try to convince someone and you throw around all the aspects of money that are so important, of hard money, or just having some kind of fixed story that you tell every time, instead of doing that, I like to ask people what they already know about Bitcoin, because immediately in just like a minute or something, you learn like how much do they actually know. Like, have they done any kind of research on this? You can immediately pick out misconceptions, just obvious things that people always repeat that are false in some kind of way, or you can learn sort of what kind of angle they come at it from, what their position on it is. There's a lot of interesting aspects you can learn just by listening for that 1 minute rather than immediately jumping into your version of the story. And you can then process that and sort of address them from an angle that makes sense for them. So if you're talking about how Bitcoin is amazing, like if your usual pitch is something like, oh, Bitcoin's amazing for like transactions all around the world, but you're talking to someone who lives in a first world country, who has access to online banking, who can pay with their plastic card everywhere, it's not going to resonate with them as well as someone who might do remittances frequently and actually need this for their personal use cases, or maybe their family needs it or something like that. So just getting that first impression, like sort of what do you know? Because at this point, almost everyone knows something about Bitcoin. That already sort of gets you going and allows you to, what I like to do as well, is not convince them that Bitcoin is great for them or that it's better. Instead, I try to assess, like, are they positive on it at the moment, somewhat neutral, or somewhat negative? And if they're quite positive about it, you can just easily have a nice conversation. If they're pretty neutral, then it's kind of showing them like there's more to it than you think. There's some potential there, some things that might be really interesting for you. And if they're negative about it, I don't try to make them positive about it. It's too much of a jump. Instead, I try to correct sort of the misconceptions that they immediately throw at me. I just point out to them in a calm way that they're wrong about these things, and that there's a lot of research that can be done, and to sort of challenge that, to try to get them in that neutral camp. Like, okay, maybe everything I've been told isn't quite true, and I should be giving another thought about this. So and look into it. So that's sort of been my overall approach in general. And the second thing besides that has been visualizing Bitcoin much more, because it's so abstract. Like, you can talk on podcasts for hours, but some people just need to see things. As people often talk about this magical moment of just sending your first Bitcoin transaction and seeing that does a lot to you rather than just talking about it for an hour or two. So,
so you'll have people actually, like if you're teaching someone about Bitcoin, you'll actually have them send a transaction or send $1 to them or something like that.
Yeah, these types of things, like just like I've done courses like this in a classroom where you have 15 people, and then you just go through all of the steps. Like, hey, this is how you set up a wallet. This is how you send a transaction. Now we can go look up that transaction in a block explorer. Just doing that for the first time for a lot of people is kind of crazy. But if you don't have that kind of time, which will often be the case, it can also be the case of explaining Bitcoin to someone through some visuals rather than just naming all of the elements of money and sort of talking about how governments are printing so much money and stuff. Like, just showing a graph of how much money governments print already does so much more than saying that they print money, because then people can be like, yeah, but like, how big of a deal is that? Well, here are the stats. It is a big deal.
Yeah, right. That's a really interesting framework you're using there to kind of reach people where they are, and rather than talking past them with your favorite talking points, and rather than coming out of the gates, with your 2-minute pitch, you're taking, this is a page out of the consultant's handbook, I guess, that I learned a while back when I was back in business school. The first lesson everyone says is like, ask the questions first, rather than like, instead of coming in with all your recommendations, do this, do this, do this. You got to ask, figure out where that person's at, what they're, in the business setting, it's figure out what their goals are and what they're trying to accomplish. And in the Bitcoin setting, maybe it's, what do you know about Bitcoin?
And it gets people excited too.
Yeah.
It makes it interactive in a way, rather than I'm just here like sort of narrating, like kind of barraging you with information that's just way too much. And then occasionally asking a question, they'll respond with 3 words, and then you go off again for 5 minutes. A lot of people don't enjoy that. They want to feel like they're being listened to, like their perspective is something to consider as well. So
right.
it's I found more sort of success in doing it that way than just kind of overwhelming them with information and then not really having a conversation.
Yeah. And I think there's also another kind of human psychology thing in there where people love to talk about themselves more than, and so like it can turn a conversation to your advantage in a little bit if you can let them speak about their issues and their thoughts on Bitcoin, and you can kind of like approach it from that angle, and then they're more receptive rather than them listening to you, a stranger they've never met before, telling them, why they need Bitcoin and why everything else sucks. And
Yeah.
yeah, there's a lot of lessons in
I,
there.
I think one other thing that has really helped me is to not come across as a salesman. Like I'm not trying to, like I mentioned earlier, I'm not trying to convince them. I'm not trying to get them to buy Bitcoin. You're just presenting information. You're just sharing things with them that might help them or not. No hard feelings if they don't do anything with it. But it helps a lot of people if you try to be objective. Of course, you're subjective because you own Bitcoin, but just looking at it from that perspective and also being open and honest about things that might be weaknesses is really important because it gives you a lot of credibility in these conversations. Whereas if you're only talking about the positives and just pumping it up and talking about price and these types of things, then people are quickly a bit on edge about it.
Right. Okay, let's get into River's Lightning report. And this was the insights from the fourth largest node on the Lightning Network. The report has been widely circulated, I think, on Twitter. I've seen it on Stacker News. I'll have it in the show notes here. Let's start with I want to get an understanding of why River first decided to put out this report. The Lightning is private by design. You didn't have to put this report out. Why'd you guys do it?
Yeah, true. So this is really like you're kind of naming it there. Like Lightning is private by design. So we were like, well, if we want this network to continue to grow and develop, it just helps to have a lot of information out there for people that they can use as benchmarks that sort of give them an idea of where things are at today. Because over the last few years, Lightning has been growing, obviously, but there was also a period where it was relatively quiet in terms of like, is anything happening? Is there development going on? If you know who to follow and you're familiar with the space, then you'd keep an eye on that. But if you're not, if you're just someone who uses the main chain or who just has their Bitcoin in cold storage somewhere and just reads up on it every now and then you might be like, okay, where's Lightning at? You need to go search for that in some cases because there were still a lot of things that needed to be worked out in general to get it to where it is today, I suppose. So just sort of seeing all of the news around the Lightning Network, there had been some good reports in general as well from, I believe, like Arcane Research put out the State of Lightning twice now, and that's been really good to see. But when I joined the company and I realized like actually we're running some of the largest nodes by capacity, I figured there's just got to be so much valuable information in there that could help people, and there are only so many nodes that have this much information available that could share it with the network. So I figured let's just make a first step. Obviously talked about it internally, like what do we want to do there? How much do we want to give away? Obviously. But we were like, yeah, let's do it. Let's see. There's already smaller node operators that were sharing as much data as possible as they could, which has been a huge help to, I believe, everyone around the network. But we thought, let's keep adding on to this and see perhaps others will follow. Perhaps we can do more collaborative research in the future, where we just present stats from far more nodes than obviously we're currently doing with our 2 nodes. So it really came from a perspective of can we help people out there. And it was funny because I was at the Bitcoin Amsterdam conference, and after my talk there on the report, I went to the SAT stage where Gleb Naumenko was there, Aaron van Weerdum, Sergei Kotliar from Bitrefill, and they were talking about Lightning and sort of its scaling challenges. And then someone asked Gleb, like, why are payments failing today? And he was like, well, actually, I don't have a lot of insight in it because it's private. So I kind of rushed to the front and was like, guys, like, we just published data on this, and I hope this can start conversations and help them to figure these things out because they, like, up until this point, don't always have a lot of insight in sort of the statistics behind it. Like, what are the biggest causes for payment failures? At what sort of thresholds does that start, etc. So we can get into all of that.
Right. So I'd love to know more about like why you decide to share the types of information you share. You talk a lot about the types of channels you guys like to have, the strategy of like not appealing to you're not trying to build the node with the most number of channels. You're not trying to build the node that is necessarily the most profitable. You're trying to go after reliability. You talk a little bit about your routing earnings in the report. You talk about payment success rates, payment sizes. What was your process of thinking about like what information you should include? Because to some degree, this is also competitive, right? Like, yes,
Yeah.
it can be helpful to bootstrap this network, and you want to help people get this information if it's not available. But at a certain point, it becomes competitive, and every node is trying to compete with all the other nodes to pass payments through. So
Yeah.
how do you guys think about what information you should be sharing, and will you continue to release these reports over time?
I think to your last question, the goal is to do it more often. And really, the first sort of pass here of putting out this report was from a perspective of what would I like to know from River, sort of like what would I be interested in. And earning is obviously something that comes up there in a thing that a lot of people want to know. Like, okay, what are you earning from routing? Uh, People like to understand things like, does it make sense to have a lot of channels? Like, and things like, what are the biggest bottlenecks in running Lightning infrastructure? So it was really from a perspective of what makes sense, what would people want to know, and then you filter that down a little bit by what is actually competitive information. Like I had a few requests where people are like, "Oh, can't you list your most profitable channels like between like?" And it's like, yeah, we could, but if we put that out there, then a lot of people will just copy that same sort of route. They'll like reconstruct the routes that we have, and then for everyone, the profitability drops. So then nobody wins in any kind of way. So that type of stuff I didn't include, and wasn't even really much of a discussion internally. Like, should we be doing that or not? That goes a little bit too far at this stage, I would say, to put it publicly. If it's for purposes of this could help developers to figure things out that increase the reliability of the network, then it's a different discussion, perhaps.
Mm-hmm.
But it's just a matter of being a bit selective there, but in general, being as open as possible. And if we start realizing, okay, this is negatively impacting our like on a large scale, negatively impacting our Lightning activities, then we could always decide in the future to scale back on some of that. But for now, the Lightning Network is sort of relatively small in terms of like how much money is actually flowing around it, relative to Bitcoin, for like the blockchain, for example. So for now, it just makes a lot of sense to share data, I think, and get the network as reliable as possible. And once that's the case, people can compete all they want in the future, I guess, once it
Yeah.
becomes super serious.
Yeah, the social kind of structure of the Lightning Network is very strange right now because on the one hand, there's you want to be connected to all these nodes on the network, especially the bigger nodes, the ones that are processing a lot of payments. You really want to have this like you want to be deeply embedded in this network, right? You want to be like central. On the other hand, you don't want to reveal your profitable strategies. You want to be as far away from everyone else as possible. You want to not have any communication about what's making you money because over time that's going to be what sustainably allows you to continue operating the node. How do you think this social kind of network is going to evolve? I think Jesse Schrader, when he was on from Amboss, he referred to Lightning as a social network, and it was the first time I had heard someone describe it like that. But I'm now seeing more of that, and I understand that a little bit more. How do you think these social agreements are going to evolve between node operators? Do you think it will become normal for people to, share in closed settings? I want my liquidity pushed to this side, yours is on this side. Like, do you think that will be a discussion people have in closed settings or more public settings, or is over time are we just going to have this hyper competitive environment where people just shy away from all communication with third parties?
I think there will always be communication because there's always people seeking ways to sort of benefit more than others. And people will always try to like just talk to peers and see like are there things that we can do to sort of game the system in a way or become more competitive than some of the others that are like taking part of our profits, we believe, or something. So in general, humans are this way. So I think that will continue for quite a long time. And in public and private settings, you'll see this probably. I would expect that as time progresses and there's a lot more automation in Lightning, and people start figuring out the best strategies, etc., then this might change and sort of that landscape would be different than it is today. But at such a small stage as it is now, I would guess there will be more sort of like one-to-one conversations or small groups, etc. But in general, like to your previous question as well on data sharing, one of the benefits of sharing data and making Lightning appealing to a lot of people is just increasing that set of people who have an interest in running successful routing nodes that are supporting the network and decentralizing it. So the more data sharing we have, the more people might be interested in getting involved. And that also allows the network to remain decentralized and not just have like a group of, say, 50 to 100 people that are together just dominating a large part of all the traffic. And it's really hard for anyone new to come in.
Yes,
And
I 100% agree there that just sharing data and having this available now, we can, anytime someone outside of the Lightning space is looking for information, what do they see right now? Before this report came out, the popular metrics, and still probably the most cited metrics, are public capacity numbers and channels and nodes. But there's very little visibility into like payment activity. And there's this report revealed a lot of that. But prior to that, I think the assumption a lot of people have, and I talk about this a lot on this podcast, is that I think people still think, Lightning's relatively small. It's pretty private, so we can't get hard numbers. So let's just round it down to zero. Let's just call it nothing. And they just kind of turn off their brains after that. And, unless they're actually running a node and they're actually seeing payments go through, there is no visibility. So like, what are they going to, there's nothing to measure for them. So it's super helpful to have these reports. I agree. I want to talk a bit about your Lightning channels. One of the first parts of the report highlights that you guys aren't trying to be the most well-connected node on the network. This historically, I don't know if this is, I won't speak for everyone in the network, but historically, I've heard a lot of people talk about how you do want to be, a central hub on the network. You do want to have a lot of connections. That is a valuable thing to have. What's your take on that, and where do you agree and disagree with that take?
I think we tried to address this in the report a bit as well. There's different reasons why people are on the Lightning Network, and it's good to be aware of those. We tried to kind of highlight this in these different types of node profiles. So to call this is just some new terminology that may or may not catch on in any way. But the idea is that some people, they join the Lightning Network for personal reasons. They want to send personal transactions, to buy things, to occasionally, or to transfer from and to exchanges. That may happen. Those will be more edge nodes rather than the well-connected ones. But it's good to be aware if someone is that kind of node or not, because it may influence your decision to open a payment channel with them and to lock up any kind of liquidity. And then there's lots of people who want to be routing nodes because that's where they can make money. And that's just where they want to be as connected as possible and be connected to the larger nodes, as you previously mentioned. So from our perspective, we come at it from a bit of a different angle, because we are also an infrastructure provider. So we're not just River first integrated Lightning in 2019. So deposits and withdrawals as one of the sort of first brokerages/exchanges to do this. And from that point on, at some point, we onboarded the Chivo wallet for their Lightning activities. We became an infrastructure provider for them. Now, when it's your own business that you're routing Lightning payments for, it's a bit different because you have that direct communication with your clients. But once you start offering infrastructure to other companies, and there's any kind of issues, like a payment doesn't go through for some reason, it is your problem. Even though you do not face that consumer, you'll need to tell the company, if a payment doesn't work for some reason, this is what you need to tell them, or this is the action that you need to take. And they will look at you like, this is your problem. You've got to fix this. You've got to make sure all the transactions go through. So from that perspective, our focus is very much on reliability. And so opening channels with people's non-custodial wallets that may only be online once per week or something, or people that have a Lightning node as a hobbyist, but they're only sending one transaction per month. It's just a bit less appealing if the focus is on reliability to create payment channels with those people and to be connected to them. So there's a bit of selectivity there, and not everyone's happy about that. There have been some people complaining in the past, like, oh, why aren't you opening a channel with me? Because I'd like to, I want to check this thing out. And I'm sure almost all large nodes have had some complaints like this, or lots of requests from people, can you open a channel with me? And sometimes there's a bit of selectivity there. It doesn't mean that it's an elitist club where you can't get in unless you open a certain channel size or have a certain track record on the network. But as time progresses, it may become pretty relevant to have a decent reputation, or to be able to show somehow to these large nodes, I'm going to be someone that's worth connecting to. This is my track record, or what I'm planning to do with the Lightning Network. and that just helps to convince people to connect to you in a way. So
Right. How does River determine today who to connect with?
So there's a bunch of different factors. It's nothing too complicated. It's mostly just looking at, is there any kind of track record of like, how long has this node existed? How many channels do they have? Like, where is this request coming from? Well, for example, after my presentation, I got a request from a guy in person. He was like, I'd love to be connected with your node. I sent it over to the developer. He had a look, or one of the developers. He had a look at it, and he was like, well, like, this node makes total sense because it's been there for quite a while. It has plenty of liquidity. It has plenty of channels. Like, it's just a no-brainer. But there have been requests in the past from someone who's just like, yeah, I'm just figuring out Lightning, and I want to open a channel with you guys because I like the company or something. And then it's like, yeah, okay, but like, what are you actually planning to do with it? And it's not like they need to fill out a form and KYC and like put all of their reasons on the table of why they might want to connect with us, but there needs to be a little bit there. There needs to be a proper reason. And that's what the focus has been on so far.
Right. And if you have enough of these nodes that don't have a proper reason or some sense of how the network works, or a track record of reliability, then the worry would be that it could drag down your reliability as a service provider. Is that the idea?
Yeah, pretty much. And in general, like, since the focus is so much on the reliability, we sort of try to be selective enough. And like, obviously, like, our channel count has been increasing a lot recently with our second node growing out quite a bit. But one of the important things here as well is that we want to be efficient with our capital because we're a business. And if we just keep opening channels with everyone and there's liquidity sitting in there, but it's just almost never moving, then that also becomes a reason to close that channel down. So rather than only the question of like, should we even open one up in the first place, we also evaluate, has there been any activity on these channels in the past while? And I think like every node operator can do this exercise for themselves, where they just look at, these are all of my channels. And if I look at that, which of these channels have actually been active over the past month, for example? So how much of my total capacity is actually actively contributing in some way, if they're running a routing node, of course. If you're just an individual and you're not trying to earn any kind of returns, it's not so relevant, or you're not servicing anyone. But if you're taking it somewhat seriously, then it makes sense to take a critical look at that. And as a business, you're almost forced to, because you just need to be very efficient with your capital rather than just let it sit dormant in Lightning for months on end without really doing anything.
Mm-hmm. Makes sense. You mentioned Chivo a little while ago, and that was written in your report as well. Chivo is using River's Lightning API, I believe. Can you give listeners a better understanding of how that works? And did Chivo start with you guys on day one, or they had a service provider beforehand, right? Because they've been up and running for over a year, and I believe that your API is newer than that, correct?
So the API publicly is newer, but sort of as the first client, we started out with them. And that was, I believe, like about a year ago or over a year ago when they initially sort of like put out a request to get this connection. It's a bit before my time, so I don't know all of the details there, but we did start out with them. And the idea, like, instead of going public about that immediately and boasting like, oh, we're amazing, we're doing this thing for the Chivo wallet, we were like, let's just see down to earth, does this work sort of at this kind of scale? Can we make this as good as possible? And by working with them, we went through this process of like upgrading that infrastructure, ensuring that we add a second node for redundancy and being able to take the first one offline for maintenance and all this type of stuff. So we kind of, like, in a way, they were the first client there without going very public about it and making it a really big deal. And once we'd gone through that process, we realized, okay, there's potentially more demand for this. There's more we can do with this API that we've built. So to answer your other question, like, how does it work? In essence, when someone uses the wallet and they want to send a Lightning transaction, that transaction is routed through our nodes to ensure that they never need to worry, the Chivo team never needs to worry about opening channels, about liquidity management, about payment success rates. That's not their concern, and they can thus focus on developing the app and making it a good user experience. And we ensure that the payments get routed. And sort of the first feedback that people have then is like, whoa, that sounds really centralized, especially if you start doing this for a lot of companies. Like, what if almost no companies actually run their own Lightning infrastructure and all of them use a handful of Lightning service providers? And there will probably be many, like just before us, I believe Bitco did an announcement that they would also start doing this. And there will probably be many more companies that start offering Lightning services. But besides that, there are so many individual node operators that want to run a successful routing node on a network and can dedicate a lot of time to that. So I don't believe for the usage of the Lightning Network itself, it's not necessarily going to be very centralized, that almost everything happens just on a handful of nodes. As people will ensure it's decentralized, there's many different routes, there's ways to go around those nodes, etc. But what it does offer is for companies is a way to start using Lightning without having to worry about sort of the technical hurdles and basically putting a Lightning, like a developer on this for a big part of their time or potentially all of their time to set up the nodes, to maintain them, to update them every single time it's necessary, to ensure there's always enough liquidity. Because if you run this stuff as a business, it needs to always be there. And so many people underestimate this, because when Lightning initially started growing a bit, people started pressuring the Coinbases, all of the exchanges out there, like, you guys need to integrate it. And like, sure, a lot of those exchanges, they're big enough, they could totally spare the engineer to do it probably. But there's quite a bit of work involved there that people don't always appreciate, because suddenly you're dealing with a consumer-facing product. And if you're really excited about Lightning and really excited about Bitcoin, you know a lot about it. But if you're if you think about the average Coinbase user, lots of them, they have no clue about anything technical related to Bitcoin or any of the cryptocurrencies. They just buy what's in the interface and keep it there probably. So like offering them a Lightning product that always is online and always works, that is obviously like quite challenging. So for a lot of these companies, this could be a first step to start using Lightning. And from there on out, if they have good feedback from users, if they see the value of it, they could always reconsider to run their own Lightning infrastructure in the future. It is a bit similar to when people first buy Bitcoin. A lot of them, they go to an exchange, they buy it, and they keep it there. And that's not great. A lot of people will complain, like, you need the custody for yourself. You got to get off an exchange. And not everyone needs to do that, because a lot of people can't even remember their password. Like literally, if you told them how to self-custody, they're going to lose their Bitcoin. So while I am like very strong believer of educating people on this and encouraging them to sort of take their own keys and like have their own financial freedom, it's quite similar in this Lightning sense, that immediately pushing everyone to run their own Lightning infrastructure will just make a lot of companies wait a long time before this becomes super easy and accessible. And that slows down Lightning's adoption. So by adding this kind of service to the market, we hope that companies will see this as a way to start playing with Lightning already and to be at the forefront, to be involved in it, even if they're not necessarily running their own nodes yet.
I hope you're enjoying the show so far. I just want to give a quick shout out to our sponsor, Voltage. Voltage is the industry standard for Lightning Network infrastructure. Creating layer 2 applications and services on top of Bitcoin starts with Voltage, where you can spin up nodes, get access to liquidity, optimize your node, and much more. Voltage is leading the way as the next generation provider of Lightning Network infrastructure. And if you want to get a free trial and start using Voltage today, you can do so at voltage.cloud.
Now, so when I look at River's business as an outsider, I see like 3 different avenues in which you could turn this Lightning integration and all the work you're doing in Lightning into a business model. One which I think you guys have been clear that you're not pursuing as a primary business model is earning routing fees. One is servicing your customers and just letting them make those Lightning withdrawals and deposits. And then the other one that we're talking about now is this infrastructure piece. Is it right to think that this infrastructure piece is going to be the primary revenue driver for River's Lightning business? Is this the primary business model for you guys?
So from my understanding, this is the plan indeed, to grow this out. And obviously these things can shift, but the thing as well is it's kind of the question, what is best for both the Lightning Network and for River. As a company, you have investors, and you need to think about kind of the future of the company as well. And whenever you can find things that are good for the network in general and also good for the company, that's kind of the sweet spot. And if all you're doing on the Lightning Network is earning routing fees, that's like it's good obviously to route transactions for people, but there are many alternative routes that they could take. Like they don't necessarily need you. You're just one of many options, which is nice. But if we want the Lightning Network to grow and succeed, then there's a big question like who is going to make this accessible to businesses if we actually want to use this for all kinds of payments. And that's where we figured like we could play a big role there and grow this out and allow the Lightning Network to grow in that way. And in doing so, if that can succeed, then it could open up all kinds of other sort of financial options in the future. If Taro becomes a success in the future when it's like fully implemented and people start adopting it in some kind of way, that might open up avenues too. But first, we got to ensure that the Lightning Network is big enough, widely adopted enough, successful enough in routing the payments, and then we can sort of look at the next steps from there on out.
In your report, you highlight payment success rate of 98.7% in September. Now, this number to me, it's a lot higher than I would have expected the number to be. I believe the number, just so we have the definition of it, is this the percentage of payments that is going through River's Lightning nodes, not just River customers, it's any payment going through the node, correct?
Yeah, it's any of them, exactly.
Got it.
Yeah.
And so this is, to me, this is a really positive sign that, one of 100 payments maybe is failing, but 99 are succeeding, which, is much higher than my personal payment success rate on Lightning when I use my own node and things like that. I want to know like what benchmark you guys are going for here. How do you assess the state of payment success on the Lightning Network today? Is 98% and 98.7% good? What's great? What's the target here? What do we, when we think about like Visa and MasterCard and some of the payment infrastructure we use today, what are these guys at?
Yeah, it's kind of like it's 100 or bust. That would kind of be the goal, to get as close to 100 as possible. Obviously, that's difficult because not everything is within our control. This is something we tried to focus on in the report, to share a bit, like why are these payments failing today? Why are they not successfully being routed? One of the reasons that comes up there is timeouts. So the node is trying to find a route to send the payment, and it just can't really seem to figure anything out, and then it times out after a minute. And part of the reason that a lot of people started pointing out is this got to be because of Tor, because a large part of the Lightning Network runs on Tor, and the connections are just much slower there. So it can be tricky to figure out the routes. And so that was about, I believe, like 0.5% or so of all the transactions failed for this timeout reason. And the second biggest reason was there's just no route available to get to the point where we need to be. And this could be like, the liquidity changed in the meantime. A node may have gone offline that was previously there. So these can be all types of reasons, and that's sort of another 0.5%. And there's a very small amount of transactions that fail for reasons like, someone sent a manual Lightning transaction, they coded it themselves, but they put in a mistake in there in the routing instructions, or it could be that the nodes went offline for a bit. We had that in, I believe, June or July or so, just very briefly. One of them was offline, and then it adds up a little bit if at that time a bunch of people were sending transactions. But those altogether are quite negligible. It's really the first two reasons, the timeout and no availability of a route, that are the biggest reasons why the transactions are failing today. And some of the work there needs to happen on the protocol level and the network level, and there's only so much you can do as an individual participant besides sharing data, which is what we're trying to do. So maybe if there are other nodes out there that can also share what it looks like for them, it might start painting a more broad picture of what's going on and why these things are, why these transactions are essentially failing or not.
Why are so many nodes running over Tor?
I'm
I
guessing
know that's default, like in Umbrel and some of the products and like node offerings in the Lightning space. But if it's such a big deal that all these payments are failing, why are these services still choosing to use Tor?
Like, I'm guessing part of it is people aren't necessarily aware that it could be such a big contributing factor. And so far, the Tor thing, it's mostly a suspicion that seems to be shared by a lot of people. So there isn't, hard data that proves this is definitely Tor, but it seems like the most likely culprit from what I've understood. So it's more about like we would need to quantify in general as a network, I think, like how big of a reason is it? And if so, is that worth sort of the trade-off of using it less? And a lot of people there will say, well, no, we want the privacy aspect of Tor. It is too important, and we will just accept that there will be some payments that fail. And then there might be other nodes that say, like, like we're not going to connect to anyone who uses Tor for reliability reasons. And it's not for any kind of privacy related reasons. It's really just, we do business in some kind of way, and we need every transaction to succeed. So we need to try to avoid Tor as much as possible. That could become a situation in the future that people start considering. But for now, I think I guess it's not quantified enough, or there is too much demand from people. That's also possible, to just use Tor and to keep everything private. I can imagine why people might want to, if they put their own capacity on a node, and they might interact with others and say, like, hey, can you open channels with me, etc. You might not want that tied to a physical location, like I have X Bitcoin in this node at this location or this area. Maybe people are wary of these things that I don't really know the details of too much.
Mm-hmm. So from protocol level, when it comes to the Lightning Network, what can we do to improve, those number one and number two reasons for payment failure? How can we get around those?
Yeah, it goes like, I'd say, like way over my head in terms of what can be done technically. I'm not necessarily a technical person, as mentioned in the beginning. I believe at TabConf, which recently happened, Matt Corallo did a presentation on sort of Lightning's challenges and sort of the struggles that it has. I wasn't there personally, but I saw some pictures of his presentation, and he outlined some of the potential things that need to be fixed about Lightning to improve reliability, to improve privacy, etc. So I'm guessing that might be a good starting point for people to figure out, like, what are all the things that need to be done. In general, I think in order to improve any of these points, data, like, it's going to sound like a broken record, I can keep repeating it, but sharing data on it in general, I think, is going to help developers to even get an insight in why are they failing today and what are potential steps that we can take there. And one example that's been like really well received is René Picard's work on multipath payments as one way to ensure that more transactions get successfully routed, for example. Like, it's more of these types of things, but those insights obviously don't come without getting insights from the network itself, from the users of the network, on what is and isn't working today. Mm-hmm. So yeah, it's about giving, like, the developers, they're human too, just sharing information with them, like helping them understand what things aren't working and how they can improve upon that is a really important step.
Do you think it's realistic to, I think right now a lot of the hobbyist node operators are running nodes on Raspberry Pis, which I've heard it can be unreliable at times. I haven't personally experienced many reliability issues with a Raspberry Pi in the past, but I've heard a lot of people who have. Is it realistic to expect many node operators to continue using Raspberry Pis? Is that a constraint on payment reliability on the network?
I don't know much about that. My guess would be this is going to sort itself out in a way. If people, it's kind of a self-selecting mechanism, I suppose. Like, if people realize that actually, like, with these nodes, they go offline too much or they have issues too much, I'm just not going to connect to them. And over time, people might start realizing themselves, like, okay, my node goes offline too much, or like I have too many technical issues. This is causing problems for me to be a successful routing node. So thus, I'm going to upgrade my Lightning node to something a bit more professional, or that might cost a little bit more, but then I have the reliability of that. So I think on an individual basis there, these hobbyists, for them, it's a passion project that's really awesome. Like, it's giving them a lot of energy. They like to spend time on it. So seeing that struggle or fail is just automatically, I think, going to make them look into options to improve it, share information with each other, and then figure out along the way, like, what are actually the culprits of these issues and how can we sort of move on from that and do better. So yeah, I think, like, purely by the passion that people have for the network, I'm hoping anyway, this will get sorted out.
And is it important that people are running their own nodes, and that, centralization is a big topic of conversation in Bitcoin more broadly, but, on this second layer, do we have the same requirement for decentralization as we do on the base layer? Is it important that everyone or many participants are running their own Lightning nodes, that it's not all on one centralized kind of service that runs nodes for you? How do you reason about the importance of that on Bitcoin's second layer?
Yeah, I think it's still like, given for the sort of the size that the network has today, I feel it's a little early to make sort of really professional, good conclusions about that. So far, I can only guess. And one metaphor that I used in the report itself as well, that I believe is relevant here, is if you look at something like YouTube or TikTok or any content creation platform, it's kind of the question of like, how many content creators should YouTube have to service humanity in a way? Like, how decentralized should that be? Or should everyone watch the same 10 extremely popular channels? And people kind of come and go there, and there is a certain amount of money to be earned. And similar in Lightning, there's some kind of upper limit to how many successful routing nodes there can be before people start dropping off and just realize this is not worth my time or effort, as I'm just not earning enough from doing it. So in a way, it's sort of a self-balancing mechanism, I think, where as long as if there's money to be made, then obviously more people will naturally flock towards it and want to start spinning up their own nodes and do it. So there's really strong incentives there for that aspect. If the potential earnings on Lightning would be too low and almost nobody would be incentivized to run routing nodes on it, then I could see a bigger concern towards centralization, where only the nodes with very high capacity, massive connectivity can really get any kind of meaningful number out of this. That would be different. So far, I'm not getting the impression that it's trending in that direction, where it's becoming very dominated and there's no room or space for smaller node operators. In fact, like, we published our earning numbers and they're way lower than some of the smaller node operators percentage-wise. Like, we're earning about 1.15% per year at our current rate. But that is, as previously discussed, like, it hasn't been our focus. The focus is on reliability, and that's just the trade-off that you make there. What are we going to do our best at? But there are some smaller node operators and they make like 5+% per year at the moment. I'm sure there are some that make 10% plus and keep their mouth shut and try to keep that going as long as possible. No idea what the highest numbers are out there, but as long as that percentage is there, like 5 to 10%, a lot of people are interested in doing that. If the only hurdle there is some technical skills and devoting a bit of time to start learning how this stuff works, then I suspect as long as that's the case, it will remain decentralized enough. If that incentive drops off, then yeah, things will change, I think, and we'll learn a lot from doing that. And I would probably revise my opinion on the matter once there's more data available on it, rather than already have like a very forward-looking projection of this is how I think it's going to be. I'm not sure. I wish I could tell you.
Right. I like that incentive analogy with the YouTube creators. And, if there's enough money in the system, it will naturally attract more people to it. But I also want to play devil's advocate on the idea that attracting more people to Lightning is necessarily going to lead to decentralization. Because I wonder if, we look at like web servers on the internet, like 20 years ago, maybe you could run your own. Now everyone, there's a lot more people running web apps, but a lot of them are using the same 2 or 3 services. Is that part, do you think, concerning at all? Like, maybe we do get a lot of Lightning node operators, maybe there is a lot of money to be made, but they all end up using the same infrastructure to do it. How concerning is that to you? Is it
I'm glad you challenged it, because I think you're right there that like we've seen this happen with the internet in a way. The difference there is, of course, like yes, you can make money as an actual business running this for people on the internet, but it's a bit less direct and a bit less accessible, I would say, than Lightning is today. But if you look forward 20 years or something, then yeah, this whole landscape might change quite a bit, become way more professionalized, and then it could start looking quite different indeed. So I'd say like it's a really important thing to watch in general, and to remain aware of like how are we seeing this progress. But then again, we get back into the tricky subject of data. Like, how will we know when it's too centralized? Like, is it when the small node operators become very vocal and start saying like, I'm just seeing the traffic drop off, and I'm just seeing these big nodes, they keep growing and growing, and almost nothing's getting routed through me. I suspect everything goes through them nowadays. Or is it just the overall activity of the network that drops or something? Like, it becomes pretty hard to monitor this in a way unless people keep opening up about their data. So that's it's kind of in the interest of the network itself, if we want to see it remain decentralized, that in some kind of way we have some data sharing. But yeah, the question is that enough for people to take the initiative to publish this type of stuff?
Right. And the issues with centralization in Lightning, though, that may be different from the issues with centralization on Bitcoin's base chain, right? Like, what do you think the worst case scenario is for, we have too much centralization on Lightning? Is it just that a node operator is making more money than they should and they've kind of like captured a market a little bit? Or is there any like censoring transactions or stopping the flow of payments in some way? Is that at all a concern, or is it more just that there may be capture by a large node operator and they get more of the revenue than they should?
Yeah, it's a good, like, it's quite a, this is a really game theoretical question in a way. I'm really thinking like, what could be the worst case, and this is something I've always appreciated about Bitcoin, is that the engineers always think from this perspective, not like how can we optimize and make things as good as possible. It's how can people break this stuff and make it really awful for everyone. So I think censoring, like, it's a concern up to a certain extent, but it kind of depends, like, how expensive is it going to be to set up a Lightning node in the future? If there's so much traffic on the network, sort of like how big of a node, how much storage space do you need to have, etc. Like how big is this thing going to grow for just any random pleb, let's call it that, to set up a Lightning node? Because as long as that is accessible, then even if any kind of large nodes start censoring transactions, people will just spin up new routes. The tricky part there, I guess, is like how do you instruct the software to sort of realize, like, okay, I'm being blocked in some kind of way. I can't form connections with these nodes. So instead, I want to find a different route that still allows me to go through. There's like probably some challenges to figure out there. I'd say, like, yeah, censorship is always the most obvious concern in this regard, but the benefit is that you don't know the origin of a Lightning transaction. You really just know, like, in which direction you got to send it. So that will always be some kind of, or always, like, I would hope that it remains a good protection against like too much focus on censorship, because it's so tricky to try to figure this out. Beyond that, I would say, like, the earning aspect that you're mentioning, I could see that be some kind of concern. Of course, people can set their own fee rates, so that would help a little bit there. If, again, if the big nodes, if they're just asking too much for the service they provide, then there will be incentives for people to spin up new nodes and just undercut them and remain really competitive that way. So I like that there's a lot of these mechanisms built in that could balance itself out. The question is, of course, will they? In a way, like, how lazy are people? How incentivized are they to build alternatives to some of these challenges? So like lots of things, I'll be watching very curiously to see if this is going to succeed.
Yeah. And then, there's also an issue of, like, we don't really know where, fees on Bitcoin's base chain are going to settle over time. And that could be a meaningful, that could be, it could change a lot about the routing node landscape. If I'm a new operator and it costs $1,000 to open a channel, well, that changes the number of channels that I'm considering opening versus if they're $1 to open.
Yeah, for sure.
And then I guess it also changes then who can participate as a node operator, whereas it doesn't necessarily, fees can go up to $1,000 per transaction on the Bitcoin base layer, but a Bitcoin node operator can still run the blockchain, right? They can still see they can download this history of transactions. So it doesn't affect them, but it could affect a Lightning node operator, right?
Yeah, for sure. For sure. It's a big consideration. Also, like, I've written about this in the report as well. When you want to set up a successful routing node, when you want to actually earn a good bit of money, there's a lot of trial and error there. You might be opening channels. Some people go to liquidity marketplaces and try to buy liquidity, and not all of that may work out. So occasionally you just need to close a channel. And indeed, like if you want to bootstrap a node, set up a new node in a network that's going to be successful, you'll need to open and close a whole bunch of channels before you kind of land the sweet spot and build out your network and have good routes available to you. So indeed, like the more expensive an on-chain transaction becomes, the harder it might be for people to set up a successful routing node. And that's again, like in a way, it's a self-balancing mechanism. But if the starting capital becomes too high, then it becomes almost similar to mining in a way, where mining is sort of accessible, but there is a high barrier to entry for quite a lot of people that just don't have access to the kind of capital needed to get into mining. But that is like,
100%.
of course, it's in the future. We don't know how far off it is. And to your question towards centralization of the network and sort of the on-chain fees, I guess the tricky part is we don't know how high the fees are going to be, but we do know that typically what we've seen in the past is that the average fees, they increase pretty quickly when they do. And of course, like it'll cool back down once the hype cycle is over again or something. But in general, they tend to spike pretty quickly. And then Lightning in that state, sort of that period of time during that spiking, it's a bit harder to build it out for people to like set up new nodes. So then it's kind of like what's there in the network now. That's mostly it, what we need to do it with, what we need to start offloading on-chain traffic onto Lightning with. During that time period where it's a bit too expensive to open and close channels, it might be a little bit stagnant in a way. It might not like continue to grow as much as it did before, where it was much cheaper to open channels. So during those periods, I would say it's probably most vulnerable in a way to censorship or to bad actors messing things up. Because people will need to pay more to combat it in a way.
Right. And one other thing that is tied to the the transaction fee for opening channels and making a Bitcoin payment is what is then the average transaction size on Lightning? And this also relates, I guess, to the price of Bitcoin if we're still denominating transactions in US dollars. You guys noted in the report that I believe the average transaction size of a Lightning payment through River's Lightning nodes is $46 today.
Yeah, that was my biggest surprise.
That head? If you look forward, which direction does that head? Is it going? I can make a case for it going higher and lower. What do you think?
I think, it's kind of what you're saying. Like I could make both cases. It was actually my biggest surprise. You mentioned like when you saw the 98.7%, like, oh, really interesting. But for me, it was that in combination with the average transaction size, because I just like in my head, I was always thinking like, Lightning's mostly for micropayments. Like largely anyway, that's just where a lot of the user activity happens as well, on your podcast, for example. But the tricky part is like I saw the $46 number and I was like, well, I got to quadruple check this because there's no way it's correct. But then you're realizing, well, this just gets skewed upwards so much by large transactions. And why do those large transactions happen? It's not necessarily because people need to send them, because they can just do it on chain. But when people are experimenting with Lightning and trying to send big transactions, just kind of seeing like, does this break something in a way? It's not really something you want to figure out with a large amount of Bitcoin, but like they've got to be done one way or another. Someone has to do it to sort of gradually start increasing the amount that we're sending. But those like more likely get routed through the big nodes. So then we're included there a little bit more often. So I figured like the median transaction size is far more relevant, which is about $5. And that's sort of what I would expect to be the sort of the average on Lightning today, but then without the outliers that are skewing it upwards so much. So from the $5 point, I would expect it to go up over time, especially like if Bitcoin transaction fees just like, if they're in the dollars and they become higher and higher for just like a standard transaction, then it just makes a lot of sense for that number to go up. The $46 average as a result might climb for a while too, if people just start, like, especially if some businesses adopt it and larger payments start happening, or larger transfers between exchanges, for example, for arbitrage reasons, could be the case as well. Then I could see that climb up. But sort of remains to be seen where that's going to settle in relation to the base chain fees.
That's interesting. I know that, it on the surface looks like a bad idea to send a large transaction over Lightning, because the fee, if you have a number of hops, the fee may scale with that transaction size. So it could be like 0.25%, and 0.25% on one Bitcoin is a lot more than you'd pay if you just were making an on-chain payment. But I wonder if maybe arbitrage is one of those use cases where it is rational to do that. Like if I have an option of, if I see an arbitrage opportunity on another exchange, and my two options are wait for 6 confirmations to send money onto that exchange, or do it over Lightning, pay way more than I would have in an on-chain fee, but instantly get access to those funds, and then I can make my arbitrage play. Maybe there's a case for that being rational behavior, and I could definitely see more participants doing that in the future. What do you think about trading and the use case there for making large payments that otherwise would seem to be like irrational behavior?
It could be the case. I think like today, a lot of traders use stablecoins for this reason, which like it makes total sense, but for some it might make less sense in the future. It all depends on how regulations develop. I have no idea. I don't look at that too much today. I think another interesting aspect there might be if people start issuing stable coins on Lightning through Taro, then that could be the way that people start doing it, and that would also just severely undercut the fees there in a way. So that could become an accessible option, but that is probably a while out before exchanges really start adopting it. But in general, yeah, people will make some kind of trade-off of like how much am I paying versus how much benefit is this giving me, and yeah, it really depends where it settles. If it's in favor of the arbitrage, then people will do it for sure. If there's money to be made.
Yeah.
So yeah, it depends a bit on how that develops, I guess.
Off by hand, do you know what the largest payment River has routed is?
No, not off the top of my head. I would need to check that.
Okay. I think I've seen a couple people on Twitter. I want to say someone on Twitter mentioned routing a full Bitcoin at some point.
Yeah, I'm pretty sure I saw this as well. Yeah.
Okay. Yeah. That's about the highest number I've ever seen on Twitter, but of course that's a very limited set of data. I'd be interested to know what that maximum number is today.
Yeah, I doubt it's us. Like I'm just thinking off the top of my head, if we even have any channels of that size. I don't know if we do, but yeah, if it was us, maybe I would have included it in the report, but I didn't look at it. What was the biggest one? It's a really obvious question. And when I put out the report and did a presentation, this is also kind of a request for people, like kind of like, tell me what you would like to learn. We're not going to share everything, of course, but maybe there are interesting ideas of things that people feel might be a good contribution. And a bunch of them came from our own developers, which I have to give a shout out to. Like there's 4 of them who are working on the Lightning infrastructure. And without them, there would be none of this. So huge shout out to them. But like I also asked them, of course, like what ideas do you have? What do you think are things that are interesting to learn about? But in general, there's lots of questions that can be asked that aren't necessarily super competitive information, but that might be really interesting to have as benchmarks, as sort of points to investigate further. So if people have any kind of requests like this, I'm always like happy to look into it without any promises like can I actually give you that data or not. But yeah, happy to look into that more.
Okay. I want to ask also about the most common types of payments on Lightning right now. And I know you have very limited visibility into, like, you're only seeing where the payment's coming from and where it's going to, not necessarily the full route. But do you guys have any insight into like what types of payments you think are happening most frequently? Like what is the activity being done on Lightning today? What are people using it for?
Yeah, it's tricky. Like I was curious too, like wanted to figure this out as well. Obviously we can't tell a lot. My first feeling as well was like, let's first map out when the transactions happen. So this is also in the report, like a heat map of when they typically happen during a week, to get a feeling of like, are people doing this for, like for groceries or something, or for leisure activities, so more often on the weekend or something like that. And by making that, I made it over the course of a couple different months to sort of compare, and it was quite consistent in the sense that people pretty much send transactions, like at least in our connected part of the network, like the nodes were connected to, from like morning to evening, from Monday to Saturday, and on Sunday a little bit less than the other days of the week. But other than that, it was quite evenly spread. So it shows that in general, would be my guess, there are loads of different use cases and reasons why people are sending transactions, hence why it's so sort of evenly spread throughout the week. If it was very focused on specific activities, then I would expect those to happen a bit more often at the same kinds of times, or at least skew towards certain hours or times of the day. And that wasn't really there. So I'm guessing it's quite a big mix, and it really just depends. I guess, like, yeah, no further insights there really, based on like what we tried to avoid for now was doing sort of analysis on an individual channel level. So just figuring out like, okay, this specific channel, like what does their heat map look like, for example, like when are those transactions happening, and then trying to reverse engineer like, okay, what could be the reasons why they're happening at these times, etc., and what kind of payments might those be. Let's reach out to them and figure out like more things on this. We haven't gone to that extent for now, as like this is sort of, as mentioned, this is sort of a first pass of the report, a first way to see like what do people like, what are they wondering about, to then start exploring what other options are there, and things to figure out. What are your guesses?
I don't know. I think there's a lot of stuff that I think there's a lot of new use cases that have been developed over the last year that will become very common. And especially when it comes to some of the social media stuff, I think there's going to be like that right now. When you think about what about the interactions that someone makes online today? The clicks and the likes and the shares and the follows and the things like that. If those are expressed as sats being sent in this kind of Web3 or Web5 or whatever we want to call this, I think that could lead to a lot of Lightning activity. Now, there's a case to be made that maybe that all happens custodially and those actually aren't made as Lightning payments. That could be true too. But I think that's the kind of stuff that I look at that and I see that's a global scale, really tiny transactions that people could make, relatively easily. Someone could be making easily in a day hundreds of those transactions, right? Just liking all their friends' Instagram posts and sending 3 sats every time they send a like. I think that for a number of payments, I think that kind of stuff could be really significant. But I don't know. Yeah,
it could be a lot of the volume, and then or sort of a lot of the frequency, but not necessarily the volume. Perhaps the volume might be the sort of the bigger trades from exchange to exchange or something like that.
Right.
I do think like there's some really interesting stuff on this written by, I think it might have been Nick Szabo, who talks about the social scalability of micropayments, I think at some point somewhere, if I'm recalling correctly. And it had me thinking a lot because I'm from the Netherlands, and there was a company here at some point, and they tried to make an aggregation of all of the newspapers, the online newspapers, and they allowed people to purchase, instead of purchasing a newspaper, you would just purchase an article for like 10, 20 cents or something. But their experience after a couple of years was that people actually didn't really prefer to do it that way. They would much rather have a subscription because it reduced the number of decisions that they made, financial decisions they made in a single day, where they start like, they didn't want users to start thinking like, yeah, I'm buying this article. Is that really going to be worth 10 cents to me or 20 cents? Or so it kind of depends on how you implement it. If you do it after content is consumed, so like on social media, you've read someone's post, you like it, and then you send them some sats, it's a bit different because it's more of a goodwill thing. Like I think Kevin did a great job with this podcast here. I should give him some sats for it. If people would have to pay beforehand, before unlocking something, then it's a totally different social construct in a way where people need to start evaluating like, yeah, is that worth the amount of money to me or not? And then they need to make decisions, and people can only make so many decisions in a day. So it was kind of the gist of the whole, like sort of the two angles to look at it.
Yeah, that's a really interesting point. I wonder if automating some of that process could eliminate some of the decisions people have to make. For example, if you said, I know some projects have done this already. I know Mash and Albi have variations of this in place. Like if I said, hey, I have a $5 budget per day, and I'm just going to browse the internet like I normally do. And at the end of the day, my $5 is dispersed to all the content I consumed on a per second basis or something. I wonder if, that then I can say, okay, I know how much I'm spending. I'm okay spending $5 a day. I recognize that's my budget and that's my limit. That's fine. And then I don't have to decide how to allocate every single penny. The browser just does it for me. I wonder if
Yeah.
that's possible.
If there's ways to build in where they're like, what is actually engaging you? Like, where are you getting your value? Like, which page are you returning to a bunch of times? Where are you spending the most time reading? There's lots of these options that can be built, and then people will naturally gravitate towards what they sort of appreciate. The tricky part is always people are lazy, I guess, and that's why subscriptions are so popular nowadays, and why so many people, like, they have tons of subscriptions to things they don't really use anymore, but they just forget to cancel it. That's really a strong sign of where the mindset of people is at, and changing that kind of behavior and making them more proactive about it. I'm not saying there are no people who prefer to do things that way and to be very intentional about who they give money to and who they're rewarding. But the question is, how big is that market size, and can you nurture that kind of behavior? So we're like kind of watching it play out in real time. Like now suddenly people have the tools to build this kind of stuff that wasn't possible before Lightning. And that's something that's really exciting, I think, to just see, like, how does that play out, and is there adoption there?
Right. I wonder what the incentives might be, and how that changes the incentives of app builders. If, for example, like, how Apple gives you if you have an iOS device, you'll see, your screen time every week. Like, what if you set a budget of $5 a day, and your budget was allocated to the apps that you gave the most screen time to?
Yeah, interesting.
Part of me thinks that maybe that accelerates some of the, like, clickbait, like, stay on my app behavior that we've seen from apps, mostly in the social media space today. But I wonder if it also leads to, like, more healthy decisions. I have to think more about that one, but that's what you just made me think of that.
Yeah.
Okay, let's go into a segment that I do at the end of every show called the lightning round. Got a couple rapid fire questions. Are you ready?
Yep.
I hope you're enjoying the show so far. I just want to give a quick shout out to our sponsor, Stackwork. Stackwork is a lightning-powered platform that generates high-quality transcripts from all of your audio or video content. They combine AI engines and hundreds of human workers all over the world who are paid over the Lightning Network to assemble these transcripts. And that's what lets Stackwork create better, faster, and less expensive transcripts than anyone else. I've used Stackwork to transcribe all of my episodes on my personal website. You can check that out. I just get the Stackwork file, copy, paste, and go. No additional editing required. If you want to learn more about Stackwork, you can visit stackwork.com. That is STAK work.com. First question. If you have to pick one app that has sent the most number of Lightning payments this year, what is it?
Oof.
Sent or received?
I would guess, like, maybe it's Wallet of Satoshi, because they have so many channels. But I have no idea.
Okay.
Could also be Moon Wallet or something, or not sure.
If you had to guess, what APY is the most profitable Lightning node earning today?
My guess would be like 15% or something like that. I'm not sure.
15%. And now, if you were to take this hypothetical 15%, this node you have in mind, how much public capacity do you think they have on their node? Because there's a limit to this, right? Like, you put too much public capacity on your node, and all of a sudden the network can't absorb that, and you lower your APY. But you don't have enough, and you can't generate enough traffic through your node.
Yeah. Well, like, to mention with the 15%, I would say, like, with the caveat that's not extremely low capacity, because otherwise maybe it's relatively easy. But I'm thinking, like, whoever's doing this, they probably have a bunch of nodes, for starters, like, to really just connect to as much of the network as possible. It's not going to be one node. And then the question is that a fair comparison, so to speak, if they run multiple nodes versus someone running one node? And I think they've probably, would be my guess, like this, I'm really just guessing, but my guess would be they've learned a lot from what is the optimal balance there. Experimented a lot with different nodes, and, like, how connected do I want to be? How much capacity do I want to have on there? And someone who's like an experienced developer and who knows a lot about Lightning could probably run lots of different experiments there, just like you would in marketing, for example, where you're trying to convert clients, just run loads of different experiments and then learn what actually works best at large scale. And if you're a hobbyist that isn't as experienced yet, you can't run experiments at that scale necessarily. So it's probably one of the more advanced users, some of the more knowledgeable people, they'll do this at scale and probably have figured out like what's the optimal balance there.
Mm. What do you think the payment success rate of the entire Lightning Network is today?
Significantly lower than the number we published, probably. Maybe it's like 80% or something like that.
Okay.
Would be my guess.
And you think it's
sure.
growing over time? Like your success rate went up, I believe, in the last month, right?
Like only slightly. The past couple months, it's been fairly stable around like 90, 98.5 to 99.5. Like it's been going back and forth sort of.
Okay.
So, but maybe like 80 to 90% would be my guess, but not sure. It could be in the low 90s already.
Okay. I like it. Has there been any book that has changed your view of the world?
I'd say plenty. I think one, like it probably gets cited a lot. The Sovereign Individual was really interesting. Quite a boring book, to be totally honest. Like it's a sort of like you really got to chew through it. It's not written in a very exciting kind of way. It's very factual, but it kind of forced me to think very critically about sort of how things in the world work. So that's been one that I've appreciated a lot, and yeah, it gets cited a lot in the Bitcoin space, but there was definitely a significant one that stuck with me. And other than that, just lots of books on general kinds of topics that interest me, as I have quite broad interests. I haven't read a ton of Bitcoin focused books actually, and I've always tried to sort of stay clear of writing a book myself because it becomes such a, like all of your time goes into it like crazy. And then that becomes you in a way, like you're marketing yourself as I'm the author of this book. Nothing against them by any means, but it hasn't really been a focus for me.
Yeah, that's fair. If you could only hold one asset for the next decade and it could not be Bitcoin, what asset would you hold?
For the next decade, and it could not be Bitcoin. And you can't say sats.
No, not allowed to say sats.
And you can't say like Taro USD on Lightning, which actually like you might as well have USD. No. That's tricky. I guess gold, but I don't really like gold that much.
Yeah.
But it sounds like the next least stupid thing.
It's not an easy question. It's not.
No, it's really not. That's okay.
Final question. Is there anyone in the Bitcoin community you'd like to give a shout out to? This could be a company that not enough people know about. It could be a team, a developer, a builder, whatever. Anyone that you think is doing great work and you want to give a shout out.
For the Lightning stuff, I think you might have spoken to him before. Stephen Ellis, Cold Sats on Twitter, I think. He's also he's a relatively smaller node operator, but still quite significant. And he might have been the first one I think I saw that was very public with his data on Lightning and like his strategies around it and stuff. And that's just something I appreciated a lot because it showed like, okay, I'm not the only one thinking about doing this. This is out there. Some people are already doing this. And that's just awesome to see that someone takes that initiative to do that. So just wanted to give a shout out there. But in general, like I'd love to shout out to lots of people that are doing interesting stuff. So
yeah. That's awesome. Yeah. Steven's work is great. I follow along with those monthly updates and some of his guides as well. Well, listen, thank you so much for taking the time. This has been a great conversation. Where can people go to learn more about you and your work?
You can follow me on Twitter. I guess like the handle will be in the show notes, SD Wouters. I'll be publishing pretty much everything there, like content related that I do. So that would be the easiest way.
Awesome. Thanks for the time. Hope we can do it again soon.
Yeah. Thank you too.
In the last 7 days, you guys sent in 31,346 sats. That came in from 30 different supporters. Thank you to everyone who is contributing to the show. It means a lot. I'm going to run through the top 5 supporters of the week. First is Mary Oscar with 8,650 sats. We have an anonymous user from Castomatic sent in 8,033 sats. Another anonymous user, 4,410 sats. Urza_CC sent in 2,838 sats. And Auburn Citadel sent in 2,400 sats. Thank you to everyone. We have a few extra comments since the last episode was published. First comes from the user that I was incorrectly pronouncing as rag3_AF, correcting me, saying it's rage with a 3. So thank you, rage_AF, for the boost, and I will remember that in the future. We have an anonymous user said, great show in response to episode 76 with Chase Perkins. And Urza_CC says, great episode. Again, in response to episode 76 with Chase Perkins. Check that one out if you have not. Impervious's browser is available on Mac right now. I've had a chance to play with it. Pretty cool stuff. Can't wait to see what you guys send in this week, and keep an eye out for another episode coming up soon.